Good morning, everyone. It's Tom Sidney Bushnell here, aka Numbers from Psych. I'm here with Adam from Goldbusters, and this is our second episode together. We usually have James with us, just to scheduling things. So it's just me and Adam today, but we'll see James again in the future. Wanted to wish everyone a Merry Christmas out there. And before I hand the time over to Adam, just a couple of numbers I wanted to share briefly. We're going to be talking about precious metals, in particular gold and silver. I mentioned this a little last time, but if people wonder why I'm called Tom Numbers and what I do for new viewers, A is the first letter of the alphabet, so equals 1. B is the second, equals 2, C 3, D 4, all the way through to Z or Z 26. So if you spell the word gold, G-O-L-D, that comes to 7, which is G. O is 15, L is 12, D is 4, comes to 38. If you do the same for silver, actually comes to 85. So gold plus silver comes to 38 plus 85, which comes to 1, 2, 3. So it's like easy as 1, 2, 3. So you'll follow the steps with Adam, 1, 2, 3, silver, gold. And I actually was down in Westminster the weekend, Parliament Square in London, central London. And I've seen this before, but I just saw it again. And interesting enough, there's a statue at the back of Parliament Square of Abraham Lincoln. And Abraham Lincoln, when you spell it, comes to 1, 2, 3, silver, gold. So I thought that was appropriate to share one today. And interesting enough, there's actually a number or a letter of a bus stop at the feet of Abraham Lincoln. Any idea what that might be?
Go on, tell us.
It's Q, which is number 17. Yeah, so you've got Abraham Lincoln looking down upon a bus stop, and then the letter or the numeric representing, or alphanumeric representing the bus stop is actually Q. So I thought that was interesting as well. And anyway, so without further ado, I'll hand over to you, Adam. How are you, mate? How's things going, and what you got prepared for us today?
Yeah, all good, thank you. How are you? Are you doing all right?
Yeah, good, man. Just busy,
Yeah,
beavering away just like you are. So yeah, busy time.
Yeah, of course.
Good. Yeah.
Well, look, apologies, James isn't here. You have to kind of suffer with just me today. James is, I think he's got a hair appointment or something like that. He's having his nails done, or he's pampering himself anyway. So we'll let him off, and I hope he watches this recording. So yeah, today we've got something that we're really excited about, and it's something that we've part of it that we've kind of helped create towards the back end, and it's something that genuinely helps people and turbocharges your investment in precious metals. You've not really seen this done anywhere before. Not to say that it isn't out there, but I think the application that we bring is quite unique. So yeah, just a quick disclaimer to say, we don't want to give people advice. This shouldn't be considered as financial advice. We just want to give education, information, awareness, and to actually empower individuals and families to make their own decisions. This is the stuff that we think you should have been taught in school, but you weren't. And there's we think a good reason why you weren't as well. So yeah, well, let me share my screen, and I'll talk you through all of this.
Yeah.
Let me pull this up here. So can you see that screen?
Just about to, yeah. How is this legal, question mark? Yes.
Perfect. Yeah. So I guess for anyone that might not have heard of us before or know what we're kind of talking about, we're talking about gold and silver, precious metals. And I just want to go over really briefly the 2 reasons why we buy metals for ourselves. And if you've heard us before, then you'll know this. The first is that we want to take back control of our personal finances. And rather than leaving money sat in the bank, paper money in the bank, which is not owned and controlled by you, believe it or not, do your own research on that, but I'm sure you'll see that. We want to take back control so that we own and control our personal finances. The second reason that we buy metals for ourselves is the performance. That paper money devalues over time. It's designed to do that. So actually holding on to it over a long period of time doesn't really make much sense because it's going down in value. And metals over the long term go up in value compared to paper money. So they're the two main pillars. Control definitely first. Some people have it the other way around and think it's the performance, but for us it's control first and performance second. So great.
Control and performance. Okay.
Yeah, they're the reasons if we were to really boil it down. There's a few other reasons, but they're the main ones. Maybe you've started investing or you're looking at investing or you started this journey. And once you do start the journey, you start to ask yourself some questions. And I'm going to put some of those up here now. So the first one might be, well, which metal should I buy? When people are starting off, they always ask us, well, what should I buy? Should I buy gold? Should I buy silver? People, in conjunction with that, people ask, well, which metal has the best price right now? And we're always saying, well, kind of compared to what? What are we comparing it to give you some, something with some substance? Another question that people get maybe further down the line is, how do I maximize my investment? How do I get the most out of this? Maybe further on, they ask, well, how do I make money when the market goes down? Is that possible? And we're going to answer these questions for you today. The other one might be, well, how can I get some free metals? Why not? Why not get some free metals? And the next one might be, well, how can I increase the amount of metals that I have without spending another penny? And you might think, okay, well, this is not realistic. But again, today we're going to show you by the end of this is possible. And then the last question, if we put all of that together, have you ever asked yourself, how can I buy the best price metals, make money when the market goes down, get free metals to turbocharge my investment without it costing me another penny, all while I'm sleeping, without having to watch a screen or do very much at all? Has anyone asked themselves that question? A big question, yeah, very big. So the way that we do all of this is we use something called the gold-silver ratio. And put very simply, the gold-silver ratio answers one question, and that is, how many grams of silver can I get with 1 gram of gold? Okay, so how many grams of silver with 1 gram of gold? You could do it in ounces, as long as it's how many ounces of silver from 1 ounce of gold, as long as all the units are the same, it's fine. The way we work out the gold-silver ratio is it's the price of gold per gram divided by the price of silver per gram. So for example, if gold was 43.26 and silver was 53 pence, then you divide one into the other and you get a ratio of 81.62. You don't need to... Is that
what it is roughly today, Adam?
Yeah, it's around, I think it just dipped before we came on to 79. So it's not miles away from this region. Yeah, so around the 80 mark roughly. Now, you don't need to do these calculations. You don't need to get the price of gold and the price of silver and divide them and do all this stuff. You can simply search for the gold-silver ratio and it will come up. And it's just one number. And from this one number, it tells us everything. Now, you might be sat there going, well, 81, what does it mean? And when some people, they'll go for a health check and they say, oh, my so-and-so metric or my blood was 85 or 10 or 0.3, and you go, is that good? Is it bad? Like, what does that mean? What's the context around it? And I always liken this to when you're driving a car. If someone says I'm driving at 100 miles an hour, you have the context that is fast. You know that that's a fast speed. If they're driving at 10 miles an hour, you know that's slow. At the minute, I'm giving you numbers, but there's no environment around it. So let me dive into that and tell you what 81 or around 80 means. So simply put, when the ratio goes up, gold is relatively expensive and silver is relatively cheap. When the ratio goes down, gold is relatively cheap and silver is relatively expensive. So that's how you read the ratios. Let's show you a chart of what the ratios look like on a chart. And so you can see they just kind of meander. They go up a bit, down a bit, up a bit, down a bit. A bit of a spike in 2020, you can see there. But yeah, just a graph. Now, this is not price. It's not the price of gold or the price of silver. It's the gold price divided by the silver price. So you've got to...
The ratio.
Yeah, exactly. It's the ratio. And the first application of this ratio, to answer those questions we posed at the beginning, is we use the gold-silver ratio for ourselves to work out what to buy, what is best value, what is a bargain, as we like to say in the UK. How do we get good value for money? So let's put a few lines on this chart to set a bit of the environment. So we'll put a line of 60. Now, none of this is an exact science, so take it with a little bit of pinch of salt, but let's start somewhere. 60 is about the average of the gold-silver ratio, roughly. Let's put a level of 80 and a level of 40. Now, if you were coming to buy metal today and the ratio was 60 at this moment in time, or around about 60, then if that was us, we would be buying 50% gold and 50% silver, straight down the middle. The reason for that is 60 is the average. So it's almost like the equilibrium point. And it's not pointing towards gold or towards silver with any clear conviction. So we go, fine. We don't know whether it's going to go further up towards gold, silver, sorry, or further down towards gold. So let's hedge our bets and go 50-50. Okay. If we were to buy metals today and the ratio was 80 or above, then personally, we would buy 100% silver. Because remember, when the ratio goes up, gold is expensive and silver is cheap. And we always want to buy what is cheap. Okay, we always want to get a lot of value and buy what is cheap. So that's what we would do. And this is why you can see just from this chart why silver has got so much attention. Because since what, 2013, 14, something like that, the chart has been, the gold-silver ratio has been above 60 and heading towards 80. I mean, even got to over 120, which is crazy. But this is why people are really loving silver, because it's undervalued compared to gold. Does that make sense?
Yeah, it does. So basically, if it goes below the mean, or well, the 60,
yep,
if I'm using the right word, then you're going to go for silver, and if it goes higher, sorry, correction, the other way,
other way around, yeah,
and then above, if it goes above that 60, then you're going to go for silver, and because we're around the 79 kind of mark, 81 exactly. Mark, you're going to go for silver.
Yeah, that's it. So exactly what you said. If it was below 40, then 100% gold, and in between, let's say 60 and 40, you could have some allocation and say, at 50, right in the middle, I'm going to go 75% gold, 25% silver. You could do that. You can be super precise if you want to. The same on the other side at 17, between 60 and 80, you could say 75% silver, 25% gold. That would be reasonable to do that. So this is the first.
So you hit 80 or 40, that's a clear 100% either way, depending on which one it is. 80
for us,
it's silver, and 40 is gold. Okay, got it.
Yeah, that's how we look at this. There'll be many people that have different opinions, but this is how we use the gold-silver ratio to work out, first of all, what to buy. Because when people ask us, well, is gold a good price right now? We say, well, what, compared to 30 years ago or compared to the next 30 years? Because those are totally different scenarios and totally different comparisons. Whereas if we compare gold to silver and silver to gold, we've got some kind of relative comparison to make our decision. It's not our opinion, we think gold is a good price right now, because opinions change. We want to give a quantitative reason, and a reason that can be looked back on and go, okay, yeah, we understand how you came to that conclusion. So that's the first application. And if you would have used this application and just bought metals and held them, here's an example of what it could have looked like. So let's say in the year 2000, you had £10,000, it could be dollars, euros, yen, whatever, and you buy £10,000 worth of gold. Well, in 2021, that would be worth £78,000, so not a bad return. And this is simply just buying and holding metals. If you'd have done with the same with silver, £10,000 worth of silver in the year 2000, in 2021, a bit less, 51,000, but definitely worth more than if you just stuck that paper money in the bank. So it's just buying and holding.
What years were they from again, Adam?
Year 2000 and 2021.
Okay, so within 21 years, that's what it's gone up to.
Yeah.
It tends to, yeah. Okay.
Yeah.
So does that kind of tally roughly with the rate of inflation during that time, or is it superseded, or is it a little less, or?
I'm not sure exactly, but most of the time we look at this stuff, it beats inflation by a long way. Yeah,
Beats,
and,
okay.
yeah, and definitely, what you've got to look at when you're looking to buy metals is not just what am I going to, as in what's the performance of gold and silver. That's 50% of the picture. The other 50% is what am I going from, and what's the performance of paper money. Because you're giving up one thing to get another. Well, both of those are important. If you're giving up something that performs at 10% a year and going to something that performs 5%, obviously that wouldn't be a good move. But if you're going from something that's losing value to something that's gaining, then that would be a smart move. You've got to take it all in context. So this is just buying and holding. But how could you get more than this? How could you actually make your metals work even harder for you? And I have to just be really clear here. This is something that is currently only available to non-US citizens, but it's something that we're working really hard for US citizens to be able to do. And hopefully in the early part of 2022, we'll have that available for those people as well. So don't switch off or discount yourself. This is it will be very useful. There might just be a bit of waiting, but it's definitely worth it, as you'll see. So
something to look forward to for the US.
Absolutely. Yeah. And we would still say get in contact with us, and we'll make sure that you're informed. We'll be shouting from the rooftops as soon as this is released in the US. Well, how do we do that? We do it simply by switching metals, by moving from gold to silver, silver to gold. And you might say, well, great, but what difference does that make? Does it, just moving from one metal to the other? And think of it in terms of, let's say, cash and property. Rather than gold and silver, let's just look at those as two things. So let's say you start with cash and you buy a property. Now, we call it buying a property. We don't say we're switching our cash for a property, but that's essentially what we're doing. So let's say you start with some cash. You switch it to a property. You buy a property. That property goes up in value. And then you sell the property, or you switch your property back to cash. And let's imagine you have more cash than you started with. I would think a lot of people would have either know of people or done that themselves where property's gone up in value. And this is the exact same thing we're doing, but with gold and silver. So let's say we start with gold. We switch it to silver. There's then a price shift, and we switch our silver back to gold. What we can do by doing that, and we're going to show you an example in a second, is you can end up with more gold than you started with. Same with the cash and property example. You end up with more cash than you started with. And you're making free metals from seemingly nowhere. Very, very powerful. Now, a word of warning on this. If you are holding the physical metal in your hand, then in most scenarios that we've looked at, it's not very efficient and not worth doing. And let me explain. If you've got it in your hand, then you would sell the gold for cash. Then you would have cash. There would be a fee associated with that selling. You would then take the cash and buy silver. And there's a fee associated with buying silver. And then you would then have to do the process in reverse. You would sell the silver. There'd be a fee involved. You'd have your cash. You then take your cash, buy gold, and there's another fee. All of those fees combined mean that your metals have got to work extremely hard for you to make a profit, for you to get more metal than you started with. So as with the kind of theme we're going with a lot of the talks that we're doing is we just want to get rid of the cash, want to get rid of the cash element. The system that we use enables us to not use cash at all. And we're not selling gold and buying silver. We're switching from one to the other. And this makes it really efficient. It means that the fees are, tiny. And it means that you've got a really good chance of profiting and without the, the gold silver ratio moving, miles before you can. Does that make sense? So if you've
does make sense, Adam, yeah.
If you've got physical metals in your hand, and we only deal in physical metals, but we don't have them in our hand, and you're looking to do this, please look at every cost involved. And yeah, just tread carefully. Make sure you do all your research with all of this stuff. So look, we've got that out of the way. So we've talked about what to buy, and we've looked at this this chart, and we've put these levels on and all this kind of stuff. Let's look at switching and how that relates. Let's take all this other stuff off. So we've just got a nice clean chart. Now, as an example, let's imagine, and just go with us on this, at a ratio of 80, nice round number, we're going to switch our gold to silver. That's just what we've decided. At 80, we're going to go gold to silver. And at a ratio of 60, we're going to switch our silver back to gold. Let's see what the actual impact that is on our metal. So if we start with 100 grams of gold, and at ratio of 80, as we said, we switch our gold to silver. And this gives us 8,000 grams or 8 kilograms of silver. Now, at this point, if you were to switch your silver...
Can you repeat that? Crackling.
Oh, yeah. So you start with 100 grams of gold.
Can you just repeat that? Because you cut out for a few seconds.
Oh, yeah, no problem. So you start with 100 grams of gold. At a ratio of 80, you switch your gold to silver, and that gives you 8,000 grams of silver or 8 kilos of silver. Okay. Now, if you were to switch your silver back to gold, then your 8,000 grams of silver would go back to 100 grams of gold, and there'd be no benefit in doing that. Okay. So there has to be some change in the ratio for us to benefit. This is the whole point. And again, it's like buying a property with cash and selling the property at the same price you bought it at. You're at the same place. So
like trading, buy low, sell high, and do it again. Yeah,
exactly. There's got to be some movement. So this is where we look at when the ratio goes to 60, you switch your 8,000 grams, your 8 kilos of silver back to gold. And as you can see, because the ratio has gone down, you've got 8,000 grams. So you're going to get more gold than you started with because the ratio is now 60. And if you did that, you switch your 8,000 back to gold, then you'd get 125 grams of gold. Okay. This gives you more gold than you started with by 25 grams. And that has a rough market value of around £1,000 today, roughly, something like that. So simply switching metals, this is not putting your hand in your pocket. You've not had to buy any more metals. You've simply moved from one metal to the other and back again. And it's when you do that full cycle that you realize your profit, your gain. If you move from gold to silver and you go, okay, well, how do I know I've got any more than I had before? It's only when you do that second switch, you go, I can compare what I started with what I'm ending with, and there's an increase. So the next question we hear people ask is, well, which ratios do I pick? Is there any magic ratios? What should I be looking out for? No magic in this. Just logic and reasonable decision making. So look, the reason we like the gold silver ratio is it has some predictability, and that works in your favor. You can see that it's never just going to shoot up massively and go off the page, because what tends to happen is gold would go up and then silver, tends to kind of go up slightly delayed. So you have this kind of ratio that maybe fluctuates and then it catches up again, and then it fluctuates and it catches up. So let's look at some ratios that you might not pick, because sometimes looking at what you don't want to do makes it easier to work out what you do want to do. So let's say you picked a ratio of 20 and you picked a ratio of 120, and you said, I'm going to switch gold to silver at 120 and silver to gold at 20. Well, in doing that, you'd make a huge profit because there's a big range between the numbers. But the frequency of that happening, the chance of that happening, is very unlikely. It might happen once in your lifetime, possibly. It's a bit like playing the lottery. There's a chance, but it's a small chance. And if you did win, then it would be a big win, but is it really worth it? So huge profit, but very unlikely. Now, looking at the other extreme, let's say you picked a ratio of 82 and 80. Well, a lot more likely that this would happen and a lot more often, but it's going to be a really tiny profit. And if you're going to be watching the market and actually doing this physically, then you don't want to be doing this and making 0.25% or 0.5% or something. You want to make it worth your time. So this is very likely, but a very low profit. What we'd like to pick is somewhere in the middle of that. For example, and this is just an example, you could pick a ratio of 78 and 70. I think when we put this presentation together, the ratio was 78, so that's why we picked it. By doing this, you get a compromise between frequency and profitability, and that works really well. What tends to happen with the gold-silver ratio is it will move to a region, let's say between 70 and 80, and then it'll just kind of meander and it'll fluctuate between a few different points. Well, that's really good for us, because if we pick points at these, not extremes, but either end of this range, then we can profit every time it kind of does a full cycle and touches these points. So every time that it goes, the first ratio on the green X to the red X, then you've done a full cycle and you can collect. You're profiting from that. And then it'll go green to red again and you profit another cycle, and so on and so on. Now, the ratio doesn't, we'd love it to do it this in this precise kind of neat way, and it just bounce off our ratios and go straight to the next ratio, but it doesn't happen like that. It's not exact. It can do whatever it wants, but it's about stacking the probabilities in your favor and saying what's the most likely and with a decent profit. And yeah, let's see how we go with that. Is that making sense, Tom? Do you have any questions about this kind of so far?
It's making a lot of sense, Adam, a lot of sense, yeah. I mean, I've seen some numbers that correlate to things I can mention, but maybe I'll mention those at the end because we're in the flow of your presentation. But it's making a lot of sense, yeah.
Perfect. Well, look, only a couple of bits just to explain the features that we use to do this. So first of all, the first one is called Switch Plus, and this is manually switching. So you kind of picking your numbers. Well, let's put it in 1, 2, 3, just as you said before, gold and silver, 1, 2, 3. Number one, you buy your metals. Step two, you pick two ratios, one that you're going to switch gold to silver, one at the second you're going to switch silver to gold. And then you simply watch the market and switch when your ratios occur. It is as simple as that. So
1, 2, 3. There you go.
1, 2, 3. We can't make it any easier.
No, we can't.
Watch it. Looking at the ratio, it's very easy to do. It's almost like checking the time. You wake up in the morning, you check the time, and you go, it's time to get up, or it's not time to get up. And this is the same with the gold-silver ratio. Let's say you've picked 80 and 70, just for an example. You wake up in the morning, you check the gold-silver ratio. If it's 80 or 70, you've got to do a switch. If it's not that ratio, which it'll not be the ratios you want the majority of the time, you go, nothing to do today. It literally as quick as checking the time. Now, that's a great option, but I can hear people saying, well, you said at the beginning, how do I do all of this, without actually watching anything and without doing anything myself? Here's the bit. The second way of doing this is something called Switch Pilot. And this is something that we collaborated with a company to create, because we had feedback from our customers saying, this is all great, love the gold silver ratio, but I haven't got really time to do this. I haven't got time to watch it. Is there any way that it can be done for me? We said, well, we don't want to do things for you because it's a fine line between advising people and all this kind of stuff. So we came up with the next best thing. And Switch Pilot is the autopilot for switching metals. Okay. Again, 3 simple steps. 1, you buy metals. Can't get around that fact. You've got to buy them in the first place. The second is that you pick two ratios. Again, can't really get around that. But instead of just writing them down on a piece of paper or remembering them and then watching the market, you actually plug them into the system. And it looks, this is just a small screenshot from what it looks like. And you tell the system where you want it to switch for you. And it watches the market. And when your ratios occur, it will automatically, hands-free, switch your metals for you. And there's two options. One that you can say, switch from gold to silver and then silver to gold and then stop. So it's kind of one cycle, like your washing machine, do one cycle and stop. Or you can select an option that it's always on. And you could leave this, I reckon you could leave this on, maybe check it once a year, something like that. So it's a true set and forget, hands-free. And whenever your ratios occur, the system will switch for you. It also won't allow you to lose money either. So it's very, very clever. And then the third step, well, sleep and dream about free metals. And yeah, just collect as the ratios move. So yeah, that's the second option, which is, yeah, I'm sure very appealing to a lot of people. Now, look, very last thing. What difference does switching make over a long period of time? How do you actually benefit? Well, we go back to the numbers that we looked at the beginning. £10,000 in the year 2000 would have got us £78,000 worth of gold today. With silver, 51,000. Great. Let's take our example and use the gold-silver ratio at 78 and 70. And imagine that we had this £10,000 in the year 2000, and we said, yeah, we're going to buy some gold, but then we're going to switch at 78 and 70. Let's see what happens. Well, from the year 2000 to 2021, the value of your metals today, again, it's the same £10,000. You've not put your hand in your pocket, you've not had to do anything, you've just set and forget, would be £190,000. That would be the value of your metals today, just by switching using the same £10,000 rather than just buying and holding. And this is the bit that we go.
And it's real money. It's not paper. It's real precious metal. Wow.
Exactly. Yeah, really powerful. And that it's possible. You know, I'm sure we've gone through it on a fair bit of detail here, but at the end of the day, all you need to do is pick two ratios. You buy your metals, pick two ratios, and either watch the market and switch, or let the system do it for you. That's it.
And how do people go for Switch Pilot? Do they just pay like an annual fee to have that, you know, work for them? How does that work?
No, there's no annual fee. It's just a type of account. You need to have a little bit, invest a little bit more, but it's doable for most people. Look, worst case scenario, you're still switching and moving between metals. I think when you work out the amount of time it takes you to check the gold silver ratio, like checking the time, and the amount of metal that you can make for doing that, it's not a bad hourly rate if you look at it like that. So worst case scenario, it works out well. And
is there, you say, a certain type of account, so there's a minimum threshold that you need to kind of invest in, you know, a combination of both of the metals to kind of kickstart you and say, right, I'm on. So if I come to you and say, Adam, I love the concept of Switch Pilot, I just want to purchase some money, money, well, it is real money, it's still gold, and just let it do its thing. What's the minimum that I need to do to put into to get me kick-started?
So every account does manual switching, and then to do Switch Pilot, you need 20,000 euros. So it's about what, £18,000, something like that. And that can be built up over time, or it can be done in one go. Yeah. So yeah, works really well.
Okay. So £18,000 roughly, or 20,000 euros, and then off you go.
Off you go.
Okay,
and
great.
Again, it's still long term. It's not become a millionaire overnight. As far as I've seen, though, that kind of stuff doesn't exist. It's just about being smart with what you've got, and using this gold silver ratio in your favor.
Excellent, brilliant. Well, just some numbers I saw. I thought it was a brilliant presentation. I learned some things from that, so thank you. And I'm sure the viewers have. And just when you did, it's interesting when we talked about 1, 2, 3 at the beginning, and you had it in your. I didn't know that was going to come up.
Yeah,
but, you know, silver, gold, 1, 2, 3. So you've got that now. And then the ratio 78, 70. 78 comes to Kennedy, 70 comes to Secret. Add them together comes to 148. Comes to simple Gematria, which is what I'm doing when we're talking to the numbers. And 148 comes to Donald J. Trump as well, which is interesting. And also, your very first or second slide, you had you talked about the ratio being 81.62. Yes. 81 caught my attention because that comes to the word dollars, comes to Tiffany, comes to cousin, but then 62. So if you do 81 plus 62 comes to 143, comes to Melania Trump, comes to my cousin Paul Bushnell. Anyway, I mentioned those in other episodes. But then the word, if you say point for the dot, comes to 74, which is Gematria, which is London, where I'm based. And, you know, probably a lot of people's UK money will go in and out of London or be, you know, stored in London or other places. But if you add that together, 143 plus 74, which is Gematria, comes to 217, which comes to my name, Tom Sidney Bushnell. So I saw that as we were talking. I was like, oh, I'll have to mention it. But I do like the little synchronicities that happen when we talk, Adam, because you know, we're talking real, we're talking gold and silver, 1, 2, 3, you know. So it's laden with little hints and Easter eggs along the way. And I didn't know that you were going to put those numbers up. So anyway, but going back to the presentation, I think that's really very useful and informative for people, because that's a lot of people want that. I mean, I'm thinking, my head's ticking, and I'm like, that would be nice to own some precious metals and allow it to just work in the background, you know.
Exactly.
And I think a lot of people find that attractive, you know.
Sure. Yeah. Be nice to have this amount on the shelf behind me, wouldn't it? Just sat there.
There you go. Yeah. Well, that's look, probably Hemington's a lot.
Yeah. Well, look, if people, you know, if people want to get in contact with us and get some more information, then please do. I'm sure, Tom, you can leave a link somewhere, and we'll go step by step with it.
There'll be a link. Yeah, there'll be a link in the top link in the video down below, everyone, on Psych Club and other channels if you pick it up. But the link will be there. I think it's Goldbusters /Tom numbers or something. So click on there, go to Adam and James and to Goldbusters and get all that information. But that sounds really very exciting and a wonderful possibility that people are being presented there, you know, and then they can make their own decisions. But that sounds really, really great. Yeah.
Great.
Anything else you want to add, Dad?
No, just hope everyone has a great Christmas, great New Year, and just get in contact with us and we can work it out and see how we can best help you. Yeah.
Brilliant. All right, buddy. Well, Merry Christmas. Speak to you again soon. Yeah. And thank you. And I did have one question actually, and we alluded to it last time. I said I'd do it for this one, and I've got to remember how I asked it. So we talked about the difference of gold and silver and how silver is suppressed a lot compared to it. You know, you talked about, you know, grams and then kilograms and kind of going to the gold question. So what are your thoughts on, do you see anything I mean, there's a few thoughts out there, but do you see silver jumping perhaps at some point in the future if, you know, if short positions and things like that were, I don't know, what's the word, taken up or stopped? You know, there's some, silver's been heavily suppressed. I'm wondering if you're seeing at some point silver could jump up quite significantly, you know, way significantly in the future. I mean, we don't have a crystal ball, so we kind of do the steady eddy, which what we've just done is amazing. But do you have any thoughts on that?
I mean, look, I think silver's very undervalued at the moment. It's a difficult one because for us, we want to be conservative, which is never a very glamorous kind of word when you're talking about investing. I'd love to say, look, silver's going to, you know, go to the moon tomorrow. Saying that and following it through are two different things. So we say, look, if you're watching the gold silver ratio, you'll collect all the information that you need, because it'll be relative to gold, and you'll see that number move. But look, let's hope for the best, plan for the worst. If gold and silver do what they've done over the last 10, 15 years, then happy days. And if they go to the moon, we'll be out there, you know, dancing with you and partying and all that stuff.
Yeah. Good. All right, buddy. Well, as always, it's always fun to talk to you, and it's always informative, and I learn something each time. So thanks for that, buddy. Merry Christmas. We'll see you in the new year.
Thanks, Tom.
And,
cheers.
Speak again soon, man. Cheers,
Thanks.
Alan. Take care. Bye.